Welcome to our video tutorial on mastering working capital, the lifeblood of any successful business. In this comprehensive guide, we'll cover what working capital is, how to manage it effectively, and explore real-world examples to tie it all together. To start, let's define working capital. Working capital is the difference between a company's current assets and current liabilities. Current assets include cash, accounts receivable, and inventory, while current liabilities include accounts payable and other short-term debts. Now, let's talk about why working capital is important. Working capital is crucial for day-to-day operations and overall financial health. It affects everything from paying suppliers to funding new projects. In essence, managing working capital effectively can enhance a company's profitability and liquidity. Let's dive into an example to understand this better. Imagine a company, XYZ Corp, has current assets worth $150,000 and current liabilities worth $100,000. Their working capital would be, in this example, XYZ Corp has a positive working capital of $50,000, which indicates they have enough short-term assets to cover their short-term liabilities and additional capacity to invest in other operational needs. Now, let's discuss the working capital cycle. The working capital cycle is the time it takes for a company to convert its current assets into cash. It's a key measure of efficiency and plays a critical role in liquidity management. The cycle includes stages like purchasing inventory, selling goods, and collecting receivables. To make this concept clearer, let's take an example. XYZ Corp buys inventory worth $30,000. It takes them 60 days to sell this inventory for $60,000, and an additional 30 days to collect $60,000 from customers. Therefore, the working capital cycle is, by calculating, we get 60 days of holding inventory plus 30 days of collecting receivables minus 0 days of payables, which equals a 90-day working capital cycle. Question: what would happen if XYZ Corp takes 45 days to collect receivables instead? Let's recalculate with these new terms. Updated calculation: 60 days holding inventory plus 45 days collecting receivables equals a 105-day working capital cycle. This highlights the importance of efficiently managing receivables to shorten the working capital cycle. Let's explore some strategies to optimize working capital. Key strategies include managing inventory levels, shortening receivables periods, and extending payables durations. Each of these strategies can improve your working capital and thereby boost your business's financial health. Managing inventory levels optimally means neither overstocking nor understocking. Efficient inventory management can reduce holding costs and prevent stockouts. Tools like just-in-time, JIT, inventory management can be beneficial in this regard. Shortening the receivables period improves cash flow as it reduces the time taken to convert sales into cash. Techniques such as offering early payment discounts or using factoring services can shorten the receivables period. Extending the payables period allows a company to retain cash longer, fostering greater liquidity. However, it's important to negotiate favorable terms with suppliers to avoid straining relationships. Let's take another example. Company ABC has an inventory period of 40 days, a receivables period of 35 days, and a payables period of 20 days. Its working capital cycle can be calculated as. This results in a working capital cycle of 55 days, indicating the amount of time taken to convert investments into cash. Question: if ABC Corp extends its payables period to 30 days, how does it affect the working capital cycle? Revised calculation: with an extended payables period of 30 days, the working capital cycle is. This results in a cycle of 45 days, highlighting an improvement in the working capital cycle by 10 days. To summarize, effective working capital management is integral to maintaining liquidity, improving cash flow, and enhancing overall business efficiency. Always keep a close eye on your working capital metrics and continually explore new ways to optimize your current assets and liabilities. Thank you for watching our comprehensive guide on working capital. We hope this video has equipped you with the knowledge to optimize working capital in your business. Don't forget to subscribe to our channel for more in-depth finance tutorials. Until next time, keep your capital working efficiently